Here is the comprehensive, deep dive expansion of your content. I have maintained your exact headings but infused them with technical depth. T-codes, example, V or O6, V or O8, VK11, and the nuances that separate a junior configurator from a solution architect. 14. Pricing condition technique, core. Pricing is the most powerful, most complex, and most tested area of SAP SD. In real projects, pricing is where business creativity collides with system discipline. Marketing teams invent complex schemes. Buy 3, get 5% off, unless it's Tuesday and you are a gold partner. And the SD consultant must translate that into rigorous logic. When business says, greater than the price is wrong, they could mean, base price incorrect, the wrong price list was picked up. Discount missing, the volume discount didn't trigger. Tax wrong, VAT was charged on an export order. Freight not applied, the weight surcharge was ignored. Rebate not calculated, the accrual didn't post to GL. Rounding difference, the invoice total is off by 0.01 cents. Intercompany markup issue, transfer pricing failed. All of this is controlled by one framework, the condition technique. If you master pricing, you control revenue, margins, and customer trust. Introduction to pricing based on condition technique. SAP pricing is rule-based, not hard-coded. Instead of writing ABAP code like greater than IF customer equals Walmart and material equals TV, then price equals $500. SAP uses a configuration framework called the condition technique. This allows the system to find the correct value by searching through records based on specific criteria. The 4 pillars of condition technique. 1. Condition tables, where to look, the key combination. 2. Access sequences, how to look, the search strategy. 3. Condition types, what to calculate, the business element. 4. Pricing procedures, how to sum it up, the calculation schema. This gives flexibility. Business users can change prices, VK11, without IT changing code. Auditability, every price element has a validity date and change log. Scalability, you can add a new discount type without breaking the base price. The same framework is reused for pricing, SD, tax, FI or SD, freight, LE, output determination, NAS, batch determination, material determination. That's why the condition technique is core SD, D, DNA. Condition table. T-code, V or O3. Create, V or O4. Change. Condition tables define which fields are used to find a price. They are essentially database tables, starting with A, example, a 004, generated by your configuration. Examples, Table 004, material, simple price list. Table 005, customer plus material, customer-specific price. Table 901, sales org plus region plus material group, regional pricing. Important rules, more specific equals higher priority. Usually, you search for customer plus material before just material. Too many tables equals performance issues. Every table in an access sequence requires a database read. Poor design equals pricing chaos. Using non-standard fields, like created by, for pricing keys, makes maintenance a nightmare. Senior insight, greater than condition tables, should reflect business pricing logic, not imagination. If the business never prices by division, do not add division to the table. Access sequence. T-code, V or O7. The access sequence is the search strategy. It acts as the intelligence that guides SAP on which tables to check and in what order. It tells SAP, 1. Which condition table to check first, usually the most specific. Example, customer-specific price. 2. What to check next if no record is found. The next most general. Example, price list. 3. When to stop searching. Usually, exclusive flag is checked, so if a specific price is found, it stops looking for a general one. Example logic, access sequence PR02. 1. Access 10, customer plus material, table 005. Found. Stop. Access 20, price list type plus currency plus material, table 006. Found. Stop. 3. Access 30. Material. Table 004. Found. Stop. This allows customer-specific pricing. Key accounts get their special price. Fallback pricing. Everyone else gets the standard price. Controlled overrides, ensuring a negotiated deal always wins over a list price. Access sequence design separates junior versus senior consultants. Juniors create new sequences for everything seniors reuse and optimize. Condition type. T-code, V or O6. The condition type defines what kind of value is calculated. It is the semantic meaning of the money. Examples: PR00, base price; K007, customer discount; MWST, output tax; KF00, freight surcharge; SKTO, cash discount. Key controls inside condition type. Condition class. Is it a price? B. Discount or surcharge? A. Or tax? D. Calculation type. Is it a fixed amount? B. Percentage? A. Or quantity-based? C. Plus or minus? Is it positive, surcharge, or negative? Discount. Manual entries. Can a user change this in the sales order? Scale basis. Does the price change if I buy 100 units? Value scale versus quantity scale. Accruals. Is this a rebate that needs to post to a provision account? Condition type is where pricing behavior lives. Base price. Standard types. PR00, price. PB00, gross price. Base price is the starting point of pricing. Without a base price, all percentage discounts are calculated on zero. Characteristics. Mandatory. The pricing procedure usually marks this as required. Source comes from master data, VK11, or reference material. Exclusive. Typically, if one base price is found, you don't look for another. Senior insight. In B2B, you might use list price, table lookup, versus manual price, entered by representative. You configure the procedure so manual overrides list. Discount. Standard types. K004, material. K007, customer. K005, customer or material. Discounts reduce the net value. Discount controls. Percentage versus amount. 10% off versus $10 off. Header versus item. Does it apply to the whole order, RB00, or just one line? Maximum discount. Configured to prevent sales reps from giving away the product. Example: max 20%. Common mistake. Greater than allowing unlimited manual discounts without authorization keys. This leads to margin leakage. Surcharges. Standard types. KF00. Freight. KP00. Pallet charge. Surcharges increase the net value. Examples: small order fee. If order value $100, add $10. Urgency charge. Rush delivery fee. Handling charge. For hazardous materials. Senior insight. Surcharges must be clearly visible to the customer on the invoice to avoid disputes. They are often mapped to specific GL accounts for service revenue rather than product revenue. GST, tax. Standard types. MWST, global. JOIG, India. UTXJ, USA. GST, or VAT, or sales tax, is not optional pricing. It is legal compliance. Tax determination depends on 1. Departure country, plant. 2. Destination country, ship to. 3. Customer tax class, taxable versus exempt. 4. Material tax class, standard rate versus reduced rate. GST condition types, example: in India. JOSG, SGST, state tax. JOCG, CGST, central tax. JOIG, IGST, interstate tax. Tax pricing must be greater than legally correct. Rates updated immediately upon gov changes. Greater than audit proof. Tax codes mapped correctly to FI cost. Standard type, VPRS. Cost conditions represent the internal cost of the material. Characteristics, statistical. It does not affect the price the customer pays. Source: it pulls the moving average price or standard price from the material master accounting view. Purpose: to calculate the gross margin, net value, VPRS cost in the sales order. Used for profitability analysis, Colorado, PA. Blocking orders or price cost. Cash discount. Standard type, SKTO. Cash discount is a financial incentive for early payment. Example: 2% 10, net 30. Key nuance: calculated in SD for information purposes, so the customer sees potential savings. Realized in HEFI during payment collection. SD does not reduce the invoice value by the cash discount amount, it only presents terms. Important: greater than cash discount is not a trade discount, it is a financial term. Minimum surcharges. Standard type, AMIW, min value. AMIZ, surcharge. Used to enforce profitability on small orders. Logic: condition AMIW stores the minimum value. Example: $100. Condition AMIZ calculates the difference. If order equals $80, AMIZ adds $20. If order equals $150, AMIZ adds $0, often used in spare parts business. Wholesale distribution. Free goods, standard type, R100, 100% discount. Free goods are pricing-driven promotions. NA00. Mechanism, inclusive, buy 10, pay for 9, item category changes. Exclusive, buy 10 phones, get 1 free case, new line item added. Pricing impact. The free item usually has a price, PR00, but it is followed by a 100% discount condition, R100, to make the net value 0. This allows the system to show the customer you saved $X rather than just showing $0. Rebate. Standard type, BO03. Rebates are deferred discounts paid retrospectively. Key idea: customer buys all year at standard price. If they hit a volume target, example, $1M sales, we refund 2%. Rebate pricing, accruals. Every invoice posts a provision, expense, to FI, anticipating the payout. Settlement, a credit memo is issued at year-end, VB 7. Senior insight, high audit sensitivity. Companies use this to hide true margins or shift profit between quarters. All header discount. Standard type, HA00 percentage, HB00 amount. Header discounts apply to the entire document and distribute to line items. Behavior. If you give a $100 header discount on an order with 2 items, value $80 and $20. Item 1 gets $80 discount. Item 2 gets $20 discount. Distribution is proportional to net value. Used for close the deal negotiations by sales managers. Rounding diff. Standard type, diff. Rounding difference handles system precision issues. Scenario: you sell 3 units at a total of $10. 0. Unit price equals $3. 33,333. 33. 33 equals $9. 99. Diff adds $0. 01 to balance the total back to $10. 00. Important for high volume retail billing. Japanese yen, no decimals, conversions. Intercompany Santo. Standard type, PI01. Intercompany price. Used when Company A sells to Company B, same group. Pricing, logic, transfer price usually equals cost plus markup, or market price, discount. Statistical in order, the intercompany price is statistical in the sales order because the customer doesn't see it. Real in IV billing, it becomes the actual revenue for the supplying company in the intercompany invoice IV pricing procedure, T code, V or 08. The pricing procedure, calculation schema, is the engine. It defines the sequence of calculation. It defines 1. Order of condition types, base price first, then discounts, then tax, then total. 2. Subtotals, storing net value or tax basis into temporary buffers, KZWI1 to KZWI6. 3. Requirement routines, VOFM. Only apply discount if customer is wholesaler. 4. Alt calculation formula. Calculate tax based on volume, not value. 5. Account keys. Mapping the value to a G or L account in VKOA. Poor pricing procedure equals chaos. Example. Calculating tax before deducting the discount. Pricing procedure determination. T code. OVKK. This is the red wire or blue wire connection. It determines which schema to use. The formula, sales org plus dis channel, plus division, plus customer pricing proc, plus doc pricing proc, equals pricing procedure. Cust pricing proc, from customer master, sales area data. Doc pricing proc, from sales document type, VOV8. If anyone is wrong, greater than pricing fails completely. User sees no pricing procedure could be determined. Condition records. T-code, VK11, create. VK12, change. VK13, display. Condition records store the actual numbers, $105%. Important realities. Configuration, T-codes above, defines the logic, the container. Condition records, VK11, define the money, the content. These are master data, not configuration. They can be maintained by users in production. No condition record equals no price. 16 fields of pricing with controls. In the pricing procedure, V or O8. Every line has these critical control fields. 1. Step, sequence number. 10, 20, 30. 2. Counter, allows multiple conditions in one step. 3. Condition type, the element, PR00. 4. Description, text description. 5. From or to, defines the basis for calculation. Example. Calculate discount on step 10 to 20. 6. Manual, allows manual entry. 7. Required, is it mandatory? Base price, usually yes. 8. Statistical, does it post to accounting? VPRS is statistical in invoice. 9. Print, does it appear on the output? 10. Subtotal, assigns value to a bucket, example. A for credit price. 11. Requirement, ABAP routine check, example. Check if item is priced. 12. Alt calculation type, ABAP formula to override standard math. 13. Alt condition base value, ABAP formula to change the basis, example. Tax on partial value. 14. Account key, links to G or L, ERL equals revenue. 15. Accruals, links to G or L for provisions. ERU equals rebate accruals. This is expert-level SD knowledge. Customizing these routines requires VOFM knowledge. Common real project pricing problems. 1. Pricing not triggered, check OVKK, determination. 2. Wrong price picked, check access sequence analysis in the sales order, item greater than conditions greater than analysis. This is the best debugging tool. 3. Discount missing, check validity dates in VK13. 4. Tax wrong, check master data tax classifications, customer or material. 5. Revenue posted to wrong account, check account key and procedure, plus VKOA, mental model to lock in. Condition technique is greater than structured flexibility. It allows business freedom within controlled rules. It separates the rules, IT ownership, from the rates, business ownership. Final perspective. Pricing is where SD earns its salary. Logistics moves goods. Accounting records money. Pricing decides how much money. If pricing is right, revenue is right, margins are accurate, and trust is intact. If pricing is wrong, nothing else matters. Say next when ready.